Hello and good morning. Happy Friday. Good to have you guys back. Welcome to the showdown. If you guys are brand new and you like live trading, well, you're in the right place. In this session, we do some live trading with your favorite guest, FxBigDog, and we'll be using our smart entry AI tool to go ahead and implement those trades live for you today. So we're ready. If you're ready, we're going to go ahead and start right after this. Good morning, Big Dog. Happy Friday. How you feeling today? You're muted. I think your mic's muted there.
Yes, I am. I am muted today. All right, good stuff. All right, good morning, Cam. You know what? Yeah, and happy Friday, everyone. Man, it's been a crazy week. We've had a lot of news coming out. We had a lot of rate decisions coming out. So it's been quite a bit of stuff. The markets have been reacting weirdly. We've been talking about the dollar and what the dollar's going to do. We know that the dollar's going to see some interest rate cuts. And that's going to be next week. They're talking about a 25 basis point cut, which is the minimum. We probably might see a 50 basis point cut. That's also in the talks as well. We're going to go ahead and take a look, see how the market's going to react in today's trading as we go ahead and dive into the setups. So, and we are going to talk about the dollar, right? We're going to have a conversation around the dollar. We're definitely going to see, what's going on with the dollar. We're going to go ahead and break it down and see what it is that we want to look for when the market, based on the market's change of directional bias. So, let's go ahead and dive into it, Cam. So, you want to go ahead and let's go ahead and pop open the calendar for right now. I'm gonna do that. Just pop open the calendar here. Here's the calendar that we've got going here. And as you can see right here, we do have a lot of news that came out this week. We had the Aussie rate decision. They decided to keep the rates unchanged. Then we had CPI numbers that came out in the US. CPI is at 2.7%, so a slight uptick in CPI numbers for the US. We got the Bank of Canada. They went ahead and cut the interest rate 50 basis point. So they had a 50 basis point cut this week. And to be honest with you, with their cut, this was causing a little bit of a slowdown with this correction move in the US dollar CAD because we're getting some weakness out of the Canadian dollar. But it wasn't as big a move that someone may have expected. I think it was really priced in after this big long rally we had in the US dollar CAD. So, and of course we saw that dip in the CAD Swiss as well. But then we had on Thursday we had the Swiss National Bank go ahead and cut the interest rate also. They were expecting 25 basis point cut, and they actually cut it 50 basis point. So that was a surprise to the market, getting an extra 25 points on the cut. And then today, we got no data. We got no data out today. We also had, of course, yesterday, I forgot here, we also had the Eurozone also go ahead and cut their interest 25 basis points as well. So we had a 25 basis point cut in the Eurozone as well. So all the central banks are starting to sort of move into that. Let's go ahead and start cutting because of what is, let's say, preparing for the Trump era, right? So everyone's cutting interest rate, expecting to see boosted economies, looking for higher GDP, looking for jobs, good job reports. All of the stuff starting to filter out into the market right now. So where does this put the US dollar? Now, we've been talking about the US dollar for a while, Cam, and we're talking about the weakness in the US dollar, and we're expecting some weakness in the US dollar. But at the end of the day, if we actually take a look at the way the markets are, you might have to mute your mic because I'm hearing feedback. Looking at the way the markets are moving, a lot of people can say, well, we've got dollar strength, and we're not seeing some sort of turnaround in the dollar. Well, the truth of the matter is, it's not really true. We're not really seeing dollar strength. If you take a look over here, this is the dollar index. Now, when we talk about dollar strength, I'm talking about dollar strength against major counterparts, right? I'm not really necessarily talking about dollar strength on its own. Because remember something, you also have to realize that the dollar's not just traded on its own, it's traded against something, right? And so the dollar index is comprised of currencies like euro, pound, Swiss franc, JPY, Swiss krona, and the Canadian dollar. So it's all those currencies that the dollar's featuring again. So this is when you look at the dollar index is telling us how is the dollar featuring against the counterparts, the other currencies. All right. And if you look over here, I've already gone ahead and broken this down, and I'm going to go to the monthly time frame here first, and I'm going to break this down on the monthly. So the monthly shows that we're inside this range. So the dollar's not really breaking out yet. We're not seeing this. Yeah, so we saw this big upside move in the dollar, but it came off support here. All right. And so it's still inside the range. So the question here is the market going to continue to move back up, or going to see a rally in the dollar? Well, as of right now, I'm going to say that, yeah, sure, we can say that the dollar is in the bullish bias, right? We can say that the dollar is in the bullish bias, but it's still inside this bigger, larger range here. And so if I go now to the weekly time frame, here's the weekly. Do we see any sort of bearish bias in the weekly? And the answer to that is yes, we do. We actually got the weekly candle go ahead and close out below the previous week. We had this little bit of I won't say it's spinning top, but it's very likely to be something close to that. Also, we also swept the previous high right here. And we all know that when the market sweeps liquidity, it looks to hunt for liquidity on the upside, right? We start looking for these liquidity sweeps. And we did get the market to sweep liquidity up at the top here. We had a nice little sweep at the top here. And then after the market swept that liquidity, look what the market went ahead and done. Closed out with a bearish bias. Now, you could say now that we're currently inside a bearish bias. You can see here my weekly range is bearish, so we're in a bearish bias. So which means that traders, that if I go down to the lower time frame, what I'm going to be looking for is, do I see a market structure change? Because what's going to happen here is that we're going to see the market try to go back to retest this area, and then it's going to go ahead and turn around and head back down south, because we want to see the market distribute below, or at least expand below this previous weekly low right here. All right. And so because of that, if I go ahead and dive into this a little bit more, and what I'm going to do here is I'm going to go ahead and dig deeper into this. I'm going to go to my 4-hour time frame right here. And here's the 4-hour. So if you look at the 4-hour, once after the market going ahead and swept the high, we did see a market structure change. There it is there. So we saw a market structure shift. There it is. And now we see the market pulling back up here. So now the question is, how far is it going to pull back up before it starts heading back down south? So I'm going to go ahead and say that when I go down to my, let's say my 1-hour time frame right here, I'm going to look for this structure. I'm looking for this to be my change. This is my downward swing. So I'm going to call my AB boundary, if you want to call it that. All right. So we got a price swing from A to B. We had the market structure shift. And so now this is just an ABCD correction. A, B, C. So if this is an ABCD correction, then what I'm going to be looking for right here is, do I find, or can I find any market structure shift on the lower time frame to indicate that price is now going to move down south? And that'll be giving me sort of the turning point in this weekly range. So what am I saying overall? I'm looking at this and I'm saying, hey, we have a weekly bias. And so the market's in this correction. And now I'm going to look for a turnaround to the downside. All right. So which means I'm going to be continually looking for a bearish setup until, of course, the market takes out the high. If the market takes out the weekly high, my bias has changed. All right. Now I've got something really, really important for you guys that I'm going to go ahead and talk about in a minute. But what I'm going to do is I'm going to go and I'm going to talk about the dollar, but I'm going to give it to Cameron first. Let's go ahead and cover a trade opportunity right now on either Aussie CAD or New Zealand CAD. Cam, you want to take it away?
Yeah, so pick either one.
Pick either one. Grab either one. Yep.
Okay. I'll pick the Aussie CAD.
All right. Aussie CAD it is.
Let's go take a look here. Oops. Okay. Go daily here. All right. So first thing I notice here on the Aussie CAD is looking at the weekly here. we have this candle wick showing insufficiency. We know that candle wicks are insufficiency in the market, that price will come to rebalance. And very choppy, as you can see, looking at the weekly, we've had this downtrend move, very choppy, back and forth, high resistance liquidity here, continuing lower to this weekly gap, okay? This weekly buy side balance. And what I'm looking at is this constant encroachment of this candle wick. If price can make its way back to this area, we're looking at these quadrants, right? So let me go ahead and extend this out a little bit. And if I zoom in here, you can see here, let me delete some stuff so you can see better here. This wick came back to that upper quadrant level. So we still haven't made a move. Price still hasn't pushed price into this range by the 50% midpoint of this gap and lower. So we still haven't seen that move yet. So still, again, very high resistance liquidity. This is not really a key area or key range of liquidity that I want to be trading. So going back here to the daily, what do we have above here? We have some relative equal highs, a lower high than this one. So what we could see here, what I would anticipate, is this sell sign balance is price can make its way back here into this resistance, okay, into that buy side liquidity, that equal highs, relative equal highs. So that could be the draw of liquidity that I would anticipate. So going back to the 4 hour here, what do we see here in the 4 hour? Does the 4 hour give us that confirmation here? We had that run sweeping relative equal lows. So relative equal lows has been swept. What do we see below here? Very jagged. And then we see this displacement. Okay. Now, sometimes when I see this, right? Okay. I like to see did we engage buyers in the market here? Okay. Buyers in the market mean retail buyers that buy at support. So I'm looking for, okay, can we make a run back lower to then take out those engaged buy stops or sell stops, those buyers? That could be a possibility. What do we see here? We had this run to sell side balance. And now what I'm looking for is, can we make a run back lower to this area? So before I want to see these relative equal highs look to for price to gravitate towards these equal highs, I first want to see, does price want to come back and take out these engaged sell stops? So it'll look like something like this. Let me delete this. So we had that state change, that change in state delivery to the upside, but where did price run to? It ran to insufficiency. We know that we've taken out these relative equal lows. We've engaged buyers in the market. And that's where I must confirm, okay, if we engage in buyers in the market, what does the algorithm most likely want to do? It engages those buyers into the market and then come back to take out those buyers to then run higher. So I am looking for this to be the target. Okay, buy side liquidity. I am looking for those relative equal highs to be the target where price will gravitate to. But at the same time, looking at this 4 hour, I think we're going to get a run back to these to this low right here, to where those sell stops are sitting at. Okay, and that's about 67 pips. Okay, so what I want to see to give me confirmation that we are going to run lower there as well. Okay, let me just take some stuff out of you so you can see better. What I want to see here is this insufficiency right here. I want to see price disrespect constant encroachment. As you can see, the wicks are running lower, but the bodies are being respected. And if we can get a body of candles to close below this and trade into this lower quadrant, that would indicate me that it's weak. It's weak. Insufficiency is weak. Price is going to run lower, and that would be this singular low where that engage those buyers to then put their stops below. So that's what I'm looking for, okay, here on the Aussie Cat. So once I get that next confirmation that we're running into this lower quadrant of this midpoint of this gap, I know that its price is weak and it could push price back here to take out those engaged stops. So I would be looking for a sell opportunity on the Aussie CAD before I'm looking for price to run higher to those equal highs, relative equal highs. I think you're muted, big dog.
Oh, what is the going on here? All right, so I've got a couple of things I want to go ahead and share with you, Cam. This is pretty interesting here. So my thought over here is like, and of course we know that the daily is still active, but if you go ahead and pop open the daily time frame right there,
Yeah.
right? Actually, in fact, sorry, my bad. It was actually the weekly. My bad. Go take the weekly. Open up the weekly. If you look at the weekly right here, look at that candle, right? Look how the market's gone ahead and tapped in. We've even actually had this week a little bit of a sweep of the previous week low, and it's tapped back into that fair value gap, the weekly fair value gap. So when
Yeah,
you
this
look
one
at
right here. Yeah.
yeah, so when you look at that, right, and you look at like for instance, what we have left in the day, there's not a lot of sort of market movement that could drive the market through that support because it's pretty solid, right?
Well, yeah, I'm still looking at this candle wick because candle wicks like this play as a fair value gap. The same
Right.
thing. It
But
plays as insufficiency. So what I want to see is if price can trade to this right here, then there's possibility it can run lower to this.
okay. All right. So looking at this right here, I see that fair value gap holding. Now I get what you're saying. Hey, listen, yeah, there's a very good chance the price is going to move back down south again. So listen, here, traders. This is the reason why I questioned Cameron. I wanted to talk to Cameron about this because if you look at the previous candle actually showed a bearish bias. And so this is where traders can start thinking about this and saying, hey, listen here, and let me flip over to my chart here. And I'm going to go ahead and show you a little bit of something here. All right. So here is the weekly chart here that I have set up here. And I've got the exact same setup as Cameron's got. I've got the weekly bias, weekly fair value gap. I saw the market tapping here, but I've also got this monthly range here as well. And so look, we still got a couple of weeks left before the end of the month. So this doesn't really mean anything right now, but it is the weekly range, the monthly range is holding support there. Now, it's tapped in here. And so this is how I look at it. I look at it as, and by the way, I look at it as we have a bearish range, or at least bearish range from previous weeks. So this is a weekly range that says bearish. And if you look over here, if I look at my Aussie CAD right here, Aussie CAD stating right here, yes, our direction is bearish bias. If you look at our New Zealand CAD is also saying bearish bias. So both of them are stating bearish bias. I'm going to go into the New Zealand CAD in a minute. And so we got bearish biases sitting up on both those setups right here. So it makes sense to want to go and sell based on that bearish bias. All right. Now, if I go over here, then the question here is, and this is the big thing that a lot of people have been saying, hey, big dog, how can I enter into trades? But also at the same time, if the market moves against me, how can I protect myself that I don't get into these 100 positions, right? And so what is it that I can do to protect myself so that if the market doesn't, if let's just say as an example, let's say Cameron decides to sell and he sells his position right here, but price starts heading back up north. When is it time to start cutting loose? Now, you could say that it would be time to go ahead and start cutting loose when the market trades above the monthly high right here. We could say that, yeah, the market could go up. Let's say you're selling here and you keep selling. And you can say, all right, well, if the market goes up here, then at that point, I'm going to go ahead and say, all right, I'm going to cut my losses. But traders, that's a really far way up, right? It's a very far way up. And so if you look at this right here, you say, if you sell here, expecting price to move down lower to sweep maybe the low down here, this is actually a long way up if the market goes against you, if it does trade against. So how do we protect ourselves? Well, listen to the thing. Each time frame, we've got different time frames. We've got daily, weekly, and monthly. We've got daily ranges, we've got weekly ranges, we've got monthly ranges. And this is where traders, if you think that just automation, I actually sat with a client here yesterday, and he's actually a very high, a big influencer. And we sat down and I actually said to him, listen, you got to realize that, hey, you got to cut your losses off at some point. But you have to define based on the market itself. This can't be just automated. You can't just automate this stuff. You have to actually look and see what the structure is. Understand what the buy model, sell model means to you. And then you have to go ahead and say, listen, If the market doesn't do certain things, I'm not going to wait for the monthly candle to close out before I make a decision. I'm not going to wait for the weekly candle to close out to make a decision. And it may not be even the daily candle to close out before making a decision. So it's always going to be a case of, hey, listen here, if the market does something different, how do I get out of my position and minimize my losses on that trade without being anxious and just getting out of the trade just because I'm nervous, right? So this is what I would say here. Cameron, are you going to go short or long on this? Have you made a decision?
I'm looking for a short opportunity on the Aussie cat.
Okay. Now go to the daily time frame, guys. I'm gonna take all my drawings out here. You don't want to see anything else but the daily. Look at the daily right here. What is my bias on the daily? And that's the thing, Cam. This is my thing right here. My thing here is, all right, if I have to look at probabilities here, I've already seen that the daily has gone ahead and switched. We've gone ahead and you see all these wicks right here. If I look at my bias, if I go ahead and pull up my bias here, all right, take a look over here. We had the market going down here. We had consolidation here, all right. We had accumulation. We had the market showing manipulation here. We had the market going up. Probably, if you look over here, we had price actually sweeping up right here above this high right there. And that giving us a bearish candle. In fact, if you look at candle formation, this is a morning star forming right here. We have a bearish candle, we have indecision, and then we have a bullish candle. This is actually how retail traders are going to start buying. They're going to look at this and going to say, hey, I'm going to start buying right here. Price goes down. Check this out. This is really cool. Price goes down, and what does it do? It sweeps liquidity down here. It takes out sell stops. All right? We have a sell stop hunt, and then we now have a daily candle closing up back bullish right here. So I'm going to say that I would be more in line to want to buy on this particular pair, Cam. So I'm fighting you on this one. I would rather be a buyer on this, but I would go ahead and say that if the market, and not just trade below here, but if the market closes with a displacement candle below the daily here, then that would be a sign for me to say, you know what? I give up. Cameron wins on this one. I'm out of this trade. All right. And I'm going to go ahead and just get the heck out of Dodge. So this would be for me an opportunity. Now, traders, I could say the same thing for Cameron. Cameron could go ahead and decide, hey, listen here, he's going to sell with expecting price to move down. But then if the market goes above that daily high, if we close above, let's say 9,100, all right, then you could simply go ahead and say, I'm getting the heck out of Dodge, and I'm not going to go ahead and trade that. And so we're going to go ahead. I'm going to ask you guys to go ahead and participate here. Let's find out from you guys what would be your take based on what Cameron said, based on what I've said. Let's take Cameron. Let's go ahead and do a poll here, right? Let's see how many traders would be going long or going short. And I've given you both levels where you should be looking to cut losses, right? Cut your losses. But who would be going long and who would be going short? Go ahead and type up in the chat. Let's go ahead and see if we can get some consensus here of who believes that the pair would be going bullish. David, hi. David's in the room right here. How to join the private Discord channel or the Telegram channel? Go ahead and check out the description down below. Inside the description of the YouTube channel, you'll see that there is a Discord channel. You can go ahead and sort of the Discord channel, Telegram channel. You can go ahead and connect to the Telegram channel. The links are inside the chat. All right. So let's see here. Buyers and sellers. Who do we have here? All right. We've got here. Ricky says, I would be long. All right. Ricky says you belong. Let's keep those comments coming in, guys. Let's keep those comments coming in. All right. Let's actually go ahead and show somebody. All right. There we go. There's Ricky. Ricky says, I would be going long. Right. Who's next? Come on, guys. We got to see it. I mean, if you're not sure, then just simply say, I don't know. I'm just confused. I just don't want to do anything right now. And that's okay. All right. All right. Let's see what we got here. All right, we got. All right, so we're getting actually a bit of both sides here. We got some bullish, we got some bearish right here. Hector says, okay. Hector also says right here. So Hector's popped up here. Hector's also said, I would be going bullish right now. We got Josie. Josie says I would go long on that. Let's see. Canada will lose a correlation with the oil price. Maybe this means a big correction. Okay, so this is good information here from David. All right, saying that Canada's going to lose correlation with the with oil price. So maybe it means a big correction with the Canadian dollar's price. Okay, well, it's a question. Could it mean that? All right. We've got another person here who says we're going to go short on that position. All right, so we got some supporters there, Cam, for you. All right, going short.
Yeah, and like I said, it's really there's no decision to be made until what price does at this buy side balance.
And that is key right there. That is key. So this is key. So I'm going to say to you this, Cameron, because there is not, and I get it. If price moves below that area, then yes, that definitely motivates the opportunity to sell. But wouldn't you say that with price now above that and showing respect to that level of support, wouldn't you think if you had to make a decision right now, it would be saying, well, let's stick with the buys?
No, because the algorithm will engage buyers in the market and will look to hunt those stops first. So that's why I'd rather anticipate. I'd rather be waiting for. Let me go to this. Sorry, got some.
There's some trades going on there. The NQ while he's talking to us.
Yeah, just taking a look at some futures real quick. What was it Aussie Cat? Yeah.
Yeah, Aussie Cat.
When I see the algorithm do this, yes, these relative equal highs is key areas that the algorithm will push price to. Okay, this will be an area that price will gravitate to. But when we engage buyers in the market, when we get a sweep of relative equal lows, that is definitely when I want to start hunting the opposite now. Okay, relative equal lows has been swept. Relative equal highs is still available here. This is where I want to see price gravitate for sure. I am want to see that move,
Okay.
but I know how the algorithm works, and when we start engaging buyers into the market, it will look to come first and take those buyers out. So a lot of buyers get in here and they think, okay, we're at support, we're moving. The algorithm engage those buyers to then grab more liquidity to push price higher. So I know that's the case that can happen. Not all the time it will happen. And I'm gonna look to see, is the algorithm showing me that? And I will look at these PD rays to tell me what the algorithm is showing. So
Okay.
looking at this buy side balance and how price reacts, the fact that we've been trading and we've been gyrating a lot in this range is kind of telling me I'm more leaning that we're gonna hunt back here.
Okay.
So I obviously I'm never gonna push a button when I'm trading with a lot of risk here. I'm not gonna push a button until I get more confirmation where price wants to move. But this is where I want to expect price to gravitate. I am expecting that, but this
Okay.
is where I can expect the manipulation beforehand.
So where's the how far can the manipulation go down? How many pips are we talking about? Could it go down?
Back to the slow right
Yeah,
here.
yeah. And how many pips is that?
Uh,
That's what I'm
um,
asking. I'm asking how many pips.
about about
60,
about
70?
almost 70 pips. It's gonna probably run a little lower here and maybe tap this constant encroachment or run a little bit lower with a wick.
Okay. So and what is the upside move towards those equal highs?
Then let me
How
see.
many pips is that?
And now if we see price kind of run through this low or run through this midpoint two, if we come back and we see a body run lower below this constant encroachment, then I think this is staying. We're gonna stay. This is gonna stay open here, and we're gonna continue to run lower in this. Now we're looking at this candle wick quadrants, where we're
Okay.
gonna run lower to this constant encroachment and below this quadrant. So that's just another thing. If we don't see a soup here, and we see the candle run lower and close below this midpoint here, I would expect that price is going to trade back to these levels.
Mm, okay. All right. Well, Cameron, you're going to make a decision on that. I'm I'm going to look at the New Zealand cat. So you're going to make a decision on that.
Yeah,
Uh,
I'm gonna sell because I think these relative equal highs as well. I expect that we can run here and soup this more than soup in this right now and run back lower here. So I'm gonna sell because this right here indicates to me that we could run lower. I'd rather sit and wait and get more confirmation on this. But if I had to make a trade right now, I'm gonna lean to more that we're gonna run back to this low. So I'll go ahead and press the sell button here.
okay. All right. Cameron's going to go sell. Now I'm going to flip over to and he's using now. By the way, traders, Cameron's using our smart entry AI tool to be able to place these trades. Which when he places the trade, it automatically goes and manages the trade for him. But this is the deal here, guys. there's an upgrade, and the upgrade is coming soon. All right, and it's going to look like something like this. Let's go ahead and give you guys a little bit of a taste of this. This is what it is. All right. Now, this is not only what you're going to get. All right. The upgrade is going to have the biases so that you don't have to try and figure out what the bias is. What Cameron's doing, he's trading in the direction of the bias, which means he's trading bearish based on the bearish bias. What you don't have to worry about is where to trade, which direction, which should it be bullish, should it be bearish, what is the actual direction. Now, obviously, if you're coming to the live sessions, you'll be able to get some more input on exactly where the markets are trading at and what to be looking out for. But I'm going to do something a little different. You see the New Zealand CAD right here has a bearish bias, all right? And it's actually the system's already trading bearish right now. But I'm going to go to the New Zealand CAD, and I'm going to break this down in front of everyone here. I want everyone to get a real good understanding of what I'm looking at right here. So first thing, number one, I'm going to go to the monthly time frame. On the monthly time frame, I can see that we had a market structure shift. We've got a draw of liquidity up here. Now, why am I looking for that? Because traders, just like we said before, anytime the market goes ahead and sweeps liquidity, which is sell side, it then goes ahead and looks to move to buy side. All right. Now, we've got a market structure shift right here. I'd like to see the market take out that high, which is an internal draw right here. But in the meantime here, I can see that internally, I can see that we've broken above that trend line. We've got a downward trend line. We broke above that. We saw that the market structure shift took place over here. And now the market's pulling back a little bit here. You can see that weekly range. Look at that big weekly candle right here. Okay. Now, if I look over here, sorry, this I say weekly, I meant monthly. The big monthly candle right here. So we got this monthly range here. All right, sitting over here and there. Now, this candle right here, is it bullish or is it bearish? Well, traders, to be honest with you, if we look at the previous candle, right, the previous candle looked like this. It took us a high, broke up higher, and then this became the range here, right there. And so the market is currently trading below it. All right, the market is currently trading below this previous candle right here. Failed to break it. This candle had a big wick right here. And so even though it's trading below it, it does indicate that this is still a bullish bias on the weekly. Now, granted, traders, market's trading below it, so you would say, Big Dog, I think you're wrong. But hold a second. If this is the weekly, the monthly candle, if this is the monthly candle, and price is trading down here, okay, but it's still active, then this is still my range, which means that I'm looking at this to be accumulation, this to be manipulation, and then I'm looking for my distribution move back up north. So I'm looking at this as an internal AMD setup right here. All right. Now, let me go ahead and move further. All right. I'm going to go to, let's go to the weekly time frame. That was the monthly. This is the weekly. What is my weekly range? I've got actually a weekly range here. It sets up that it looks like it's a bullish weekly range. So the bullish weekly range, I see price moving inside this range. And look at this. Look how the market's looking to close back above that candle right there. So which means this candle is still active. And that means the market has created another AMD setup with inside this. This is accumulation. This is manipulation down here below. And now we look for distribution back up here at the top. All right. Now I'm going to go to the daily. Bring it into the daily. Here's the daily. What do I see in the daily setup right here? Does anyone know irregular flat? What is an irregular flat? An irregular flat is actually a hunt for liquidity, because what it does is creates a turtle soup that Cameron talks about, right? Because what the market does is this, right? It goes up like this, sweeps the high, and then comes back down, sweeps the low before going up north. All right. So what we have is liquidity sweep. So what are the four reasons why the market moves, right? One of them is to create liquidity, number one. Number two is to hunt for liquidity, right? And in most cases, the market is either hunting for liquidity or it is trying to rebalance, all right? Either it's rebalancing insufficiency or rebalancing equilibrium. But there's four reasons the market moves, but two of them is really based on liquidity hunt or creation, or of course the rebalancing of equilibrium or insufficiency. So now we're looking at this. We go, here the market is. By the way, here is this. Take a look here. Here we have a market structure shift here. All right, on the daily time frame. So we have a market structure shift. If I had to pull a trend line in from the top down right here, we can see the market moved to the right side of the trend line. It created a market structure shift. And then we had this. Price went up, came down, tested the high. We have equal highs over here. When that happens, price is moving towards liquidity. Where would liquidity be? If this is going to inducement for buyers, if we're going to see inducement for buyers here, where's the sell stops going to be at? It's going to be down here. All right. This is where the sell stops have been placed. And so what does the market do? Comes back down here and it sweeps the liquidity. And so I'm expecting price to now continue back up because now we've cleared those stops and now it's going to run. And so I think that what we're going to do here on the New Zealand CAD is go ahead and buy. So I'm going to buy New Zealand CAD. Now, what is your out? Right? What is your out? If you're going to get the heck out of Dodge on a trade, what is your out? If I look at this, where would be my out? Would be if the market goes against me, where would my out be? Would it be below this? Would it be below that? Where would my out be? Traders, go to the weekly time frame. Take a look at the weekly. This is the bullish range. That right there is the out. So if price trades below 81.50, cut your losses. Because if it doesn't hold, then we're probably going to go back into this breaker block sitting over here, and the market's going to try and sweep this liquidity down here. So which means that, yes, we could go ahead and move lower. So you could go ahead and say, if the market closes below that 81.55 level, cut my losses, and let's go ahead and reevaluate. All right, reevaluate and make a decision where the market's going. But that would be my out right there if I'm wrong. Okay. Now, I'm not saying that we're going to go ahead and cut our losses. I'm not saying that we're going to do that on our trade. If I go long, I'm probably going to keep my trade going long. But if traders say, hey, listen, where is my out on this? That would be your out. All right. So Cameron, let's go ahead and throw in a buy.
Okay. And then I'll show you something on the New Zealand CAD as well.
Oh yeah, Cameron's challenging me. Oh, traders, this is what.
Yeah, we have a different bias here on these two pairs.
All right,
like
perfect. Perfect.
You said buy using the CAD.
Yes.
So one thing also about the algorithm that I noticed is engineering liquidity, right? So again, looking at the New Zealand CAD here at the daily, we had sell side. What do we see here?
Sweep.
Disrupted the buy side, and we see displacement below. Then what we see here on the fair value gaps, insufficiency, price came back in, it mohawked that. When I see price run to the high of that insufficiency and then displace lower, that's called we mohawked and we ran away from it.
Yeah, tell them exactly what that meant because some mohawk. Everyone knows what a mohawk looks like, right? So you see
it runs to the high of this insufficiency. We'd like to see the upper quadrant stay open, but what happens? It runs there, and if it stays there, then I'm not really interested of a sell side here. But what happens? It mohawked here.
Yep.
To that high. Look at the bodies. Look at the body of the candles. Don't look at the wicks. Look at the bodies. Right at that high, that insufficiency, and we ran away from it. Then we continue to run lower. Okay, continue to run lower, and we broke below this buy sign balance that was acting as support. What happened when we broke below it? We came lower, and we did not sweep sell side. What does the algorithm doing? It's engineering more liquidity here. Mm-hmm. Engineering more liquidity because it's engaging buyers to then put their stops here.
Oh, man.
So we've seen more engagement here, and this is now price creating relative equal lows to then stop hunt these sellers in the market back to where? That buy side acting as an inversion. Displace lower, and we're going to see it continue to run lower back to these relative equal lows here.
Guys, this is such good information here, all right? Such good information. Go ahead and smash the like button right now. Smash the like button on this video because this is so good information. You see, traders, you understand the market. You really have to understand what the markets are doing, right? And so that's why when you get traders that says, "Hey, listen, I'm going to no, hold on. Let me revert back to this, Cam. So could you say that there wouldn't be a 20 pip rally to the upside? Would you say that 20 pips is just not going to happen to the upside?
Well, I'm looking at the daily here. Let's go to the 4 hour.
Let's
go to the 4 hour here.
All right. I like that.
We created all this insufficiency here. Price came back up, ran lower. You can see it's tapping into that range. We want to see, look at midpoint. Look at
Yes,
the midpoint here. Price
encroachment area.
hasn't traded into that range. And 20 pips is right there. So, I mean, there's a possibility, but I would probably say, I would say probably not. I'd probably look for price to just start running lower,
Okay.
and leaving this gap here.
All right. So I'll tell you what. Okay, traders, if I'm right, then if I'm right and price gets at 20 pips before it drops back down, do you all agree that Cameron should shave his head? Everyone agree Cameron should shave his head. If I'm right, Cameron should. I'm only kidding, guys. Stop it. Stop it. He's not going to
Look,
shave his head.
there's
All right?
always a possibility that price can run there,
Yeah, that's what I say.
but I'm not. My odds are more that I'm favored to run lower.
Okay, so would you shave your head if I'm right?
No.
What? I
No,
thought you
because
convinced
there's
about
a
this.
possibility that it can run back to this gap.
Now, some people are going to start posting. If you're wrong, Gary, you're going to shave your head.
No, my wife would kill me if I did that.
Yeah. All right, traders. Well, in any case, you've got the details. You guys make a decision as to how you're going to trade it. That's how I would trade it. Can we trade something a little differently? We'll take a look and see how that plays out. All right. We've got traders asking about silver, but we'll get into that in a minute. Let's go ahead and jump into the next trade, Cam. Because you got the chart right here. Let's go and open up.
We have CAD Swiss and the EUR USD available.
Yeah.
I
Euro
need to look
USD.
at the CAD Swiss. I know the CAD Swiss is everyone's favorite.
Oh yeah. Is it?
Let me look at the daily year. That was when we were looking for that sell side to be delivered to this relative equal lows, which it's completed. What I'm looking for here is we could probably run bullish here on the CAD Swiss.
I like
Because
that.
what did we come back do here? We ran higher above this high. This is breakout traders thinking, okay, we're breaking out, we're running higher. Price said, no, we want to turtle soup back to these resting liquidity below here at these relative equal lows. Completed that, and what did it do? It just ran away from that. So acting this as now an inversion. Possibly could see price want to retrace back into this inversion and then run higher. Now, there's two things how this can play out, how the algorithm works. We could possibly see another expansion higher. And what I'll be looking for is this range. Right here. This would be my extension level right here.
Oh, guys, I
Price
just
can run
realized.
back here and possibly correct. Okay, so that's where price could run to, taking out this high and running to this extension level. Or this sell side imbalance, price can always refer back to this range and then possibly want to run lower. So there's two ways it could go. Either way, I'm expecting to run at least to this sell side imbalance here, to the midpoint here. Okay. So I'm expecting this, but what I am really expecting is that we're going to probably see this run bullish. We're probably going to see price run above this, the sell side imbalance.
We'd like to see
Price can always refer back to this and run lower.
Yeah, but we'd like to see it, right?
The way, yeah, we want to see that. But the way what I saw what price did year and what price did year, I'm going to say that the expectation is that we're going to break above that and continue higher above this high to this extension level.
Sweet.
So I'm bullish here on the CAD Swiss.
Yeah.
Bearish on the Aussie CAD and New Zealand CAD, but short-term bullish on the CAD
All right.
Swiss.
So you're expecting some Canadian strength, right?
Yeah.
All right, cool. And that just justifies why you're looking at Aussie CAD sell-off as well. That makes sense. All right. All right, good. Guys, I just realized something, right? I just realized something. It is Friday the 13th. Why are you guys why are you guys looking at trading on Friday the 13th? You know that's not a good day, right? All right. Actually, in fact, to be honest with you guys, Friday the 13th is actually, believe it or not, one of my lucky days. So for those that are trading US dollar CAD, trading CAD Swiss, trading Euro US dollar, and following some of my flagship trade signals, this is a good day. This means that we're going to probably get a good turnaround to the market today. All right. And that means that if you get through today, that means next week is going to be a good, and I'm claiming it right now. Next week's going to be super, super cool. All right. Now, with that being said, I'm going to go into the US dollar CAD. I'm going to go into the Euro US dollar. I'm going to cover both of them because we're already in on the US dollar CAD. but we're not in on the Euro US on our show, right? We haven't got trades on the Euro US dollar, right, Cam?
Yeah, we have some positions in the USD CAD.
USD cap and not the Euro US dollar. All right, good. So
And then when you're done breaking down that as well, I'm going to give everyone a bonus on a trade of futures and explain to them one of the models that they can learn. I'm going to teach it for free here in the session here. Just a quick glimpse of it that they can learn that will be in that mentorship program that we are releasing next year. So I'm going to give them a nice look at that model after you're done with the breakdown of the USD CAD.
And Cameron's just gone in and let the cat out of the bag with regards to our we got a futures program that's going to be released next year, and it's going to be able to incorporate teachings on trading models, everything we talk about here in this session. You're going to have mentorship sessions. You're going to have live session with Cam. He's going to teach you everything you need to know in order to be able to make money from futures. So, guys, that's coming down the line. But let me go ahead and switch it over here a little bit. And I'm going to move to my charts. Let's take a look over here. And we're looking at Euro US dollar. I'm going to go with Euro US dollar first. And then I'm going to go to US dollar CAD. So first thing, number one, weekly. Let's go to monthly. Monthly. If we look at the monthly traders, I have to look at this. And I have to pay attention to these details. All right. So number one, we had the market inside this range. We had the market sweep liquidity down here. We had a sweep of liquidity right here. So when the market sweeps liquidity, where's it going to go to? Buy side, right? So we get sell side, it goes for buy side. Buy side's up here. So this is my external draw. So I'm looking for price to go all the way up here. Look, this is the monthly time frame. This is huge. But this is important, traders, right? Because here, this support right here, this area of support that was the sell side liquidity here is sitting here at a price level of 1.0356. All right. Now, why is this important? Traders, this is important because of this. If you look over here closer up, can you see how the market goes down and actually sweeps this low right here? All right. So we can see here, this is actually so important right here because here's the consolidation, right? This was the low, but the market sweeps all the way down, but check where it stops. It stops right at the previous low right here. So it retests that. So traders, think about it this way, right? What do we have here? We have the market creating accumulation. We have the market manipulating down below, now coming back into that range. And what is it going to expect to do? Expect to go back to external draw. All right. And so with that, I'm going to be expecting the market to continue to work its way back up. So what I'm going to do here is I'm going to look at this and I'm going to go, okay, let's dive into this a little bit more depth. This area here, I'm going to move it to the weekly. This is what the weekly looks like. Look again, just like Cameron was talking about. Market's always looking for liquidity, right? Either it's generate liquidity, all right, or it's hunting for liquidity. In this case right now, as the market went up here, look at this. We had a downward move. Then market moved up. It came down. It didn't sweep this liquidity. So what is it doing? It's generating more liquidity down here. All right, because sell stop sitting over here. And so what's happened is the market goes up, doesn't take out monthly liquidity here. All right, didn't take out my buy side right there, but comes all the way down to do what? To sweep this liquidity. So what is it creating up here at the top? All right, this is additional. It's creating additional liquidity up here at the top. So it's generating liquidity up at the top. So what are we expecting? We're expecting price to go back up and look for buy side liquidity. And so at the moment right now, here is my internal. If I look at here, my bias is sitting up right here. Okay. Let's go to this is the weekly. Let me go zoom in a little closer up. Okay, so here it is. So I've got my weekly bias. My weekly bias says I'm bearish. All right, weekly bias is bearish. So I'm looking at this and saying, okay, if it's bearish, then that means that price will try to come back down to sweep this area. But traders, we have to realize that that previous low that we spoke about, the market's holding off as support. So we're actually sitting in a range here. So we go down to the daily time frame. We go look at this in the daily. Here's the daily. All right. What is the daily doing? Well, it broke through this upward trend line. We got this downward trend line featuring right here. Let's go pay attention to the downward trend line. I'm going to go to the 4 hour. So I'm really going nitty gritty here. So here's the 4 hour right here. And I can see, okay, here's the downward move. We can see once again, sure, the market's in a range. So we got a range sitting over here and over here. What has the market done? It's done what it does every time. It's gone ahead and swept liquidity down here, right there. Swept liquidity. Now it's traded to the top, the right side of the trend line. We get in a retest here. And now it's going to look, we're going to look and expect price to go ahead and work its way back up north again. So I'm expecting the Euro US dollar to continue with the rally. And that this is just a test before the move back up north. And so I'm looking at this and I'm going, okay, I see here, we got a downside move, we've got an order block sitting over here that's becoming a breaker block. I'm going to go to the 1 hour time frame, check out the 1 hour. So if I was going to enter on the 1 hour, look at this. This is a perfect, I believe, the perfect storm right here. All right. And that is this. This right here is going to be my order block. Look how the market is respecting this order block right here. I'm going to go ahead and mark it off right here. Order block. I do actually have that set up here. I don't think I do. Hang on. I'm going to change it up here. Let me do this. Change it here. I'm going to change the color. And I'll make the color into black. Say when you go black, you can't go back. I'm just kidding. All right, just go there. Change that there. All right, perfect there. And I'm going to change the text. I'm going to go order block. All right, there we go. Perfect. And I'm going to go actually save this template as order block. All right, cool. So here we go. We got an order block sitting over here. Okay. If we've got an order block sitting over here, do we see any price rejection here? Look at this. See how this bearish candle right here, and then this candle right here closes up inside here? Guess what? I'm expecting price to go back up. Where can it go back up to? Well, first, number one, it's going to take out this area of resistance, and that's going to confirm that we're going to move back up to this area. Why is that area important? Because this area between that and that is what we call a fair value gap. It's insufficiency here on the 1 hour time frame. And so at least 50% of that move is what we're expecting. If price moves above that encroachment area, all right, then we're going to anticipate price to go fill the gap and possibly break above that. So if I look at my range here from there to the midpoint, let me see what the midpoint is about there. That's 13 pips. Above that would mean that price is going all the way up here. That's 21 pips. Cameron, let's go. Let's buy. Let's buy. Euro US dollar. Buying. All right. Going to buy Euro US dollar. Expecting price to go back up north again. All right. And so this, I believe, is going to hold. All right. Now, let's go take a look at the details here as well. Take a look here. See how price moves down? Sweeps the low. Price goes ahead and gives us a market structure shift here. You're on the 1 hour. Market structure shift. We create an order block here. Here's a breaker block sitting over here. So we're going to break a block, creating support for the market right there. Right? Breaker block. So if the market does this and wants to sweep that low as just another sweep before going up north, I'm okay with that. But at least right now, I believe we have a good sense of direction. So there it is. Expecting Euro US dollar to go back up north. Right? Off that hourly order block. All right. US dollar CAD. Take a look at US dollar CAD. Now, traders got the news coming out next week. We've got rate decisions coming out next week. It's going to be crazy, right? But I've got to go to. So if I look over here, I want to go ahead and say this: we're trading inside a weekly order block right here. All right, we have a weekly order block sitting up here at the top. We get in the market to come back to that encroachment area. All right. And it's already last month, we already saw the market spike up here. And now this month, it looks like it's trying to sweep the liquidity that was created above there. Now, obviously, we got a few more weeks left before this monthly candle closes out. But let's go now to the weekly. This is how we're going to close the weekly. The weekly, right now, I would like to see, the day's not done yet, all right? I don't want to see the market close above this area. I want to see price close below 141.72. Is it possible? Everything's possible. Are we going to see it? I don't know. But let's see what happens by the end of the day. I'd like to see it close at the end of the day below 41.72. All right. If we get a close below that, then I have got no concerns about the US dollar selling off. All right. If it doesn't close above, then traders, then maybe next week might be the week that we have to see something happen. Right. So next week will be crucial. Now, there's a lot of traders talking about 146. And I get it, traders. I mean, if I had to go ahead and compress my charts and I go look at the charts right here, I do see this external buy side right here. And it's sitting at 146.90. All right, I get it. Or 146.60. All right, it's sitting over there. I get it. I see it. And I know price wants to maybe come back up there and sweep that liquidity. But if I look at the way the market's structured right here, all right, and specifically inside a wave structure, we got wave 1, 2, 3, 4 is a range. 5 is the manipulation. We're inside the manipulation. I'm expecting price to eventually turn around and sweep this liquidity down here first before it goes back up to take out the highs right here. That's my opinion right there. That's what I believe. All right. And so I'm going to be watching the weekly closes and the monthly close. Firstly, of course, I'll pay attention to the weekly. Here's my daily close right now. The daily candle right here, this is promising. All right. If the daily candle closes below this previous daily high right there, and that is at what's that, 42.26, then I'm a little more confident of what I'm going to see next week. But we're going to have to wait and see what happens. We'll have to wait for the close, and then we'll have to see how it happens next week. Remember, they're going to be cutting interest rate. The U.S. Feds are going to be cutting interest rate 25 basis point, possibly 50 basis point. What is it going to do to the pair? It's going to weaken the currency. And so we are going to get a correction in the US dollar. All right, it's going to happen, and it may be setting up with a sort of an indication this week by the close of this of today. But next week is going to be crucial. So next week is going to be extremely crucial. All right, traders. All right, now Nicholas has gone ahead and posted. He says the close of the US dollar CAD day below 142.80 is very, very hard. Okay, you're talking about 142.80, Nicholas. Are you sure you're talking about 142.80 or you're talking about 141.80? All right. So let's get a confirmation of that, right? But hey, I'm not saying it's going to close. I'm saying I would like it to close there. But let's wait and see what the market does. And traders, let's take a look and see whether or not. And if you're talking about 142.80, I mean, I'm going to say to you right now, I guarantee you it's going to close below 142.80. All right. So it's guaranteed to close below 142.80. Now, Nick says, oh, sorry. He says, no, 141. Okay, Nicholas. You're saying 141 now. All right. All right. Let's see what happens. All right. Let's see if we do get a close below 141.80. All right. Let's see if we can get the market to go. So this is what we're going to do, guys. Just sell. Sell. All right. Just sell. All right. That'll push the market back down. But don't put any stop losses up above because let's create liquidity again. Don't put any stop losses. Just go ahead and sell. All right, traders, let's take a quick look at silver and gold. And silver and gold, have I none said he. All right, let's go. Gold's on a bit of a pullback. We've got a weekly range at the moment right now. We're looking for gold to sell off. We get a daily candle right here. Our weekly range is still holding. All right, you can see right here, we've got a weekly range. This is a bullish weekly range, by the way, for those that didn't know. We actually have a bullish range here. And we're looking at price to go ahead and run a little higher. So we have a bullish range right here. If I look at the daily candles again, I see that we did go ahead and close bearish, but it wasn't actually confirmed yet. So we're still inside this. We're going to have to wait until the end of today to go ahead and get a confirmation whether the gold's going to move back down to the lows right here. So traders, I wouldn't be touching gold right now until the close of today. If we close below the previous low, I would say that next week we can go ahead and start looking for sell opportunities back down to this level at 2,600. All right, silver. Silver, same thing. We need this daily candle because currently right now we're running into a bullish bias. We need this daily candle to close out to confirm whether we're going to be bearish. And then the draw of liquidity on this move right here will be down at about 29.63. And then we could push down a little bit lower. If I go to the monthly time frame, let's go to the monthly right here. Monthly time frame also stuck in this bullish bias. Not a we don't have confirmation yet, but I do like this. I do like the fact that the market's gone ahead and broken above, all right, and given us this indecision. And we've gone ahead and retested. Actually, in fact, I think silver's going to be selling off. I think I'd be a seller on silver right now, looking for price to come back down to retest this area down here. You can see right here, we actually got the market create this wave 1, wave 2, wave 3, wave 4. We had a manipulation right here, which means that we haven't got to wave 5. And so price is going to take out the low right here and U-turn back up north. So we could see silver going down to around about $26 an ounce. All right, traders. That's pretty much it for us right now. That's it from us, guys.
I forgot the futures breakdown.
Oh, gosh. Wait. Whoa. Don't go anywhere, guys. Cameron's got a bonus right here. Futures trading opportunity right now. Check it out. Cameron, go ahead and show your stuff. Guys, let's see. Pay attention to what Cameron's showing you right now. Important information, and it's going to be helpful when it comes to trading futures. Check it out.
Okay. All right. Thank you for giving me the floor, Big Dog. That was some great analysis there.
You bet.
All right. So futures, NASDAQ, right? I'm gonna give you one model that you can trade. That we're gonna be teaching. I have a few models that I will be teaching in the program. I'm gonna give you one today. It might even be a couple aligned with it. So I'm gonna give you what I have on my charts so you understand what's kind of annotated here on the charts. So first thing, and let me pull up my executions that I took this morning so you can see that as well. Okay. And I went in with 4 contracts, so I'll explain. I took a partial, so I'll explain everything. So first thing, coming into the morning, we had the 9:30 open. We rallied higher, okay? And I was expecting, okay, there wasn't really much opportunity to trade. If you pull up the opening range, we left the opening range. Opening range, guys, understand this. Opening range is from yesterday's close sentiment to the opening of 9:30, which is right here. So we closed at 5 o'clock yesterday. Here, if you go all the way over here, you can see it right here. That's where we closed. You can also pull up regular trading hours so you can see that. Okay. So Thursday, we're on Friday. There we close. Okay. Let's close it at usually 6:15 there. 6:14 is the last candle. Oh, sorry, not 6:14. I'm 4:14. To then when we open, which is here at 9:30. Okay. So that's regular trading hours. So that's now if you go back to electronic hours, it's going to give you all that data. And I'm using just a indicator to show me that. That's where we close from yesterday's sentiment to the 9:30 opening. Okay. This is the opening range gap. So we opened at 9:30. We continue to rally higher away from that opening range gap. And going back again to this, knowing that we swept buy side, we ran lower. Market open, we ran higher. I was expecting a manipulation. Now, from 9:30 to 10 o'clock, understand this, from 9:30 to 10 o'clock is where we most likely going to see a manipulation. We call that the Judah swing. So there was no really opportunity for me to trade here. There's always opportunities to trade the opening range, okay, which would be the opening range, not the gap. Opening range would be from 9:30 to 10 o'clock. That would be the opening range. 10 o'clock happens, we can expect some sort of reversal. Yeah, we have an SMT, okay? SMT reversal. This is a smart money technique between a correlation between NASDAQ, NQ, and ES, okay? ES never took out this high, NQ did, so there was a SMT formed above here, meaning that we're heading into a 10 o'clock range. We're heading outside that opening range gap. Now, this might be a lot of information, might be really confusing, but I promise you when we sit down, we talk about these things, those that are interested in futures and want to understand ICT and how the algorithm works here, it's going to come a lot easier. So opening range moved higher. Everything's about timing, right? In the market, everything's about timing. And when we get to that 10 o'clock window, that's when I want to see, okay, is price going to reverse? It's the 10 a.m. reversal, SMT. That's another model. I'm giving you another model here. Shouldn't be doing it, but here you can see an SMT reversal. Not much displacement. So now I'm going to go to the 1 minute, and I'm going to show you what I was expecting again. Here's that run, 10 o'clock. Where's that 10 o'clock window? I'll show you right now. There's that 10 o'clock window. 10 o'clock opens. We break above this buy side. Acts as an inversion. We run lower. Okay. Nothing. I'm doing nothing until I have confirmation, just like I was showing you in Forex. Same thing here. Nothing until I have confirmation here. We run to what? A key area of buy side balance where buyers are in the market. This is an area that price will refer back to. Okay. Price came back, refers back to that area. We come back to what? That inversion. I'm doing nothing right now until I get confirmation. When the algorithm tells me to press a button, that's when I will press a button. Now I'm going to show you when the algorithm presses the button. First thing before I do that, I want to highlight here what these yellow lines are. Okay, it's Friday. If anyone has anyone ever heard of TGIF? Thank God it's Friday. It is a strategy on Friday where we look at the weekly range and we're looking for price to retrace to a 20 to 30% of that weekly range. So if you go to the weekly, I'll remove this so now you can see. Look at this weekly candle from that low to this high. I want to see price retrace to 20 to 30%. That's where I want to see most likely a retrace. Now, does it retrace every Friday? No. And if it doesn't, there'll be another setup coming into the following week on Monday. But I'm going to look for that. I'm going to look for that. If everything's setting up, I'm looking for that 20 to 30% retracement. So when we go to the 1 minute, I have confluence that we can run lower. We get a manipulation at 9:30. That's my juice. When we have a SMT developed, we then see at 10 a.m. we're starting to see a reversal. Price refers back to this buy side, then comes back. Why? Why do we do this? Because we engage sellers in the market. Okay, people will start selling, and we stop hunt those stops. Okay, till I understand. All right, we've now hunted those sellers. We've hunted those buy stops. We have a reversal with an SMT. We have confluence that there is room or a reason for price to retrace back to that 20-30% on Friday of that weekly range. Everything's adding to me. I'm bearish. So now, when does the algorithm tell me to sell? And you can see I sold here. Actually, what I wanted to do was sell here. Now, I'll tell you what. First thing, we had a run of stops. Okay. Then we see what? Sell side insufficiency here. We reject off that inversion. That was key for me to come back to that inversion, and we reject it. What do? We create a fair value gap. What did we do? What did price do to the fair value gap? It left it open. It was unfilled. This is a breakaway gap. So now I'm looking and saying, okay, does price want to trade back into this? No, it does not. It chooses to run away from it and displace lower, creating more insufficiency. That was when I was actually entering right here. I somehow did not get filled right there. Don't know why. I think I was breaking down a pair during the session, and I missed that for some reason. But that's fine. That's fine because why? It gave me more confluence. What did we do here in this fair value gap? I talk about it all the time to you guys. So I hope you guys are learning because this is important when you understand the algorithm. 50% never got touched. What is that indicating me? The algorithm is showing me that we're booking sell side. When the algorithm is booking sell side, this 10 a.m. reversal is going to be quick. It's going to be fast. Now, I never got filled there. So what is another PE array that I could use? When we never touch constant encroachment, mid-gap of this insufficiency, we have an opening or breakaway gap here that was unfilled. Again, showing me delivery of sell side. We have a retracement to what? I'm not looking at this insufficiency. I do want to see once we leave this open, this is called institutional order flow drill. When price is showing me institutional order flow drill, it's booking sell side and it's going to move quick. meaning that we just ran into that fair value gap and we ran away from it. That's institutional order flow drill. You'll learn that in my sessions. And I love using that because it really helps you understand where price is booking. So, what PDRA did I use to get in here? Once we saw this institutional order flow drill, we displaced creating more insufficiency. When we leave this midpoint open and we run away from it, this order block, and look at that. As you can see, I was basically in no drawdown on this trade here. Order block, tapped into that order block there. I took 4 contracts, sold 4 contracts. Okay. These are micro contracts. And where am I looking to target? Okay. Now, first thing, always got to have partials. So what I was looking at is, first thing is, look at this 30% retracement. Where's that at? At my extension, my quarter extension. So how am I using this quarter extension? I'll give you a quick breakdown here. From this high to this low, that's our opening range. Opening range. Price wants to run lower, continue bearish. I'm looking at that 0.25, that quarter range. Okay. That's where price will extend to. And look at that. It's literally sitting right at that 30% of that weekly range that we want to see price retrace to. So listen, not only that, what do we have below here as well? We have London low. This is today's London low. Okay. So there was a lot of key areas that I wanted to see price gravitate to. So what I said is, okay, first thing is I'm going to take my partials here at this singular low here of that opening range low. Okay. It's actually the low is right here. This is where we opened, but we're pretty close to it. So I use that low right there, that singular low, to target as my partial. You can see it ran, closed there at that low. 2 contracts closed. I was in 4 contracts, so 2 closed there. And then I wanted to really target here. This is where I really wanted to see price run to, but I'm always going to take my partials at the, the most easiest execution I can have there. And then my second, I left those 2 runners to where I wanted to see price run here. This is where I was targeting, but because that London low is pretty close to it, there's no reason for price to run here and not take out that London low. That would be foolish. Okay. So that's where I target. And as you can see, it literally just ran to that London low, swept that London low. And that was the trade for the day. We closed out 4 contracts. And then I was out of the trade. Then we just had a little bit of a run back to this insufficiency and then continue back to that midpoint of that opening range. So that was nothing for me to play around with. I took my contracts off there, target that London low, target that 30% retracement of the weekly range, and target that quarter extension of that opening range. Pretty simple. Might not be simple if this is your first time looking at this, but the more you go ahead and learn this and break down, will come with me in the sessions and I break this down and we do these, talk about these concepts, it's going to come a lot easier. A lot easier.
Fantastic.
Well, that's understanding the algorithm and how price moves, not by buying and selling pressure. That's something I've learned. Price doesn't move by buying and selling pressure. Okay, it moves by the market maker algorithm. Okay.
Hey, listen here, guys. I wanted to say this, right? It's important to diversify in investing, right? You have to diversify. Now, you can diversify in different strategies in trading in just Forex alone, but trading different instruments is important. We're going to create a platform that you can actually get involved into futures with the education, the funds get funded as well. So get funded as well as be able to get the education, be able to trade futures as a different asset. Now, all the teachings and training that Cam is going to be providing is going to actually help you in both Forex and futures, which is important. Understanding what buy side means, understanding what liquidity means, but understanding what, fair value gaps and insufficiencies, understanding all of these terminologies that Cam is referring to that helps traders to understand where the markets are moving. So make sure you check this out. Traders Network Club is going to be launching the new business model the 1st of January, which, yes, it includes automation for trading Forex, like we're doing currently right now. All of the other stuff, new strategies that we're going to implement that traders can go ahead and diversify into different currency pairs. Also, it's going to be moving into futures, offering opportunities and mentorship into futures and training into futures. So all of this stuff is going to take place. Cameron's going to be the boy the guy, not the boy, but the guy. Cameron's going to be the guy that's going to spearhead all of that stuff. I'm really excited for you guys to get involved into those type of
Yeah.
things. So make sure you check it out. We will be launching out. Reach out to our support at TradersNetworkClub.com if you guys need any more information. That again, that email is support at TradersNetworkClub.com. Check
Yeah.
it out.
And
Traders.
then, and then sorry, also just to clarify, because I know it's the way the students know how we trade with forex and how we dollar cost average and how we add positions. Right. This is completely different though. This is actually completely different. This is me going in with 4 contracts here, and I had my stop loss here at this encroachment of this gap because I expected that to be unfilled. And I'm targeting this. So I'm risking in this trade, I was risking 4 contracts, so 91 pips. I was risking almost about $200. I think it was like 185, and to make $600. That's the risk on of this futures. Is this is not me adding more positions. I am coming in with 4 contracts here, holding a stop loss above an area, and targeting to go ahead and close those contracts.
And traders, you can get involved in that with as little as $1,000. That's the bonus right here. As little as $1,000. Obviously, build up your account and get to where it needs. And if you're going to get funded, obviously that'll be a different story. You can get funded with 25,000, 50,000, 100,000, whatever that is. So there's going to be options. There's going to be definitely options here in order to be able to get involved. So really excited. And of course, with the forex side, we are looking at implementing new strategies that do have sort of limitations to how much risk you're taking on a trade. And we're going to be talking about that as well. That's part of our program that we're going to be releasing on the 1st of January. So really excited about that. And by the way, every bit of every information that we're going to be passing on is going to be properly educated. So people are going to know exactly what they need to do and not come in there blindly and just try and figure things out. It's going to be absolutely clear as to what you're going to be doing, how you're going to be doing it, and what types of returns you're going to be receiving. So with that being said, traders, thank you very much for a Friday afternoon, for a Friday morning session. Thank you for coming in and joining us and keeping us company here in the session today. We love you guys. We appreciate you guys. And we will see you guys in the next session. This is FxBigDog signing off.